So Charlotte, we've just published our 2019 outlook, which we have titled this year Choppy Waters. I guess there's kind of 5 themes that run through the whole publication. The first one being that growth will be lower this coming year, although still a roundabout trend. The second one is that inflation will also be low. And despite that, the third one, that policy rates will continue to creep up a little bit further from here. The fourth point is that we think bond yields will remain, again, very low, continuing to be low for long. And from a risk asset perspective, we think credit will continue to underperform, and the equities are likely to offer decent returns, but it will be somewhat volatile and choppy. When I say it like that, it sounds, a fairly nice outlook. What could possibly go wrong from here?
Well, I think I agree with you on this one. It sounds like a fairly benign outlook. I think in reality there are lots of big key issues that need to be dealt with this year.
Yeah.
We got the Brexit to start with. There's Italian politics. And what is slightly worrying is this is a year when actually Draghi is leaving the ECB.
Of course, yeah.
We got the China slowdown. We do expect a stabilization in the economy, but we're still not seeing it in the data. What more, there is the US-China trade dispute, and of course there's Fed tightening.
When I hear that, that sounds like a laundry list. You've got me a bit worried here. If you had to put your neck out and pick one thing for 2019 that really matters for you, which one would that be?
Well, for me, probably it would be the US-China trade dispute. These are the two biggest economies in the world, roughly 40% of global GDP. They're highly integrated into global trade systems. There's a lot of supply chains feeding into China-US trade. So if we have a further disruption there, that will have spillover effects on the global economy at a point in time when we're already in the late stage of the cycle. So we need to see constructive moves there. Now, our takeaway from the latest meeting between US and China, when they agreed on a 90-day truce around tariffs, that's a positive one. It's positive they're actually prepared to talk and that they are prepared to move forward on this issue. At the end of the day, it's in both countries' interest to actually maintain free trade between them. So cautiously optimistic on the global trade side. I guess you would probably pick something else from that washing list?
Well, I agree that one is probably right up there. But to me, in a way, it's about the Fed. What the Fed does really matters on a global basis. And, if you think about it, we're just about to have the 9th rate hike of this cycle. The Fed shrinking its balance sheet by $50 billion per month. And, we're beginning to see that take effect. If you look at the housing data, whether it's, construction or the existing home sales, they're beginning to slow month on month now. And I think that's a warning sign. And indeed, if you think about inflation, we only just kissed the Fed's target, and we've now slipped back from that. So from my perspective, I think that there's big room to pause at least and see what's going to materialize from here on.
So if that's your view, that would imply that would help these bond yields to actually stay low going forward, because if you look at the other major central banks, they're not tightening policy, they're still holding on to very low rates. But the other implication, I guess, is that that's something which is quite good for financial markets more broadly. Yeah,
I think so. I think it's still a problem for credit markets because we are at the end of the cycle and we know that leverage is high and interest coverage is low. So I think credit markets will still struggle. But that backdrop should allow, I think, equity markets to move higher. As I said, a bit choppy, a bit lumpy, but still sort of a positive return over the course, or at least parts of 2019.
So we skimmed through a lot of issues here. More details, of course, is available in the 2019 publication. Choppy Waters, available at Zurich.com.
Absolutely.